Welcome to the short-term rental property or STR mini lesson. I'm really excited to bring you this content. There's a lot of information to share, so we're going to jump right into the lesson and talk about the subject matter. Over the last decade, short-term rental properties with the launch of Airbnb, Vrbo, HomeAway, etc. have become very popular. So the ownership of these rental properties and the management of them has increased greatly over those last 10 years. So due to that, the IRS came out with Treasury Regulation 469-1TE3. I won't repeat that again. We'll get technical. But to give us some guidance on how to report this short-term rental activity. And really, the reporting comes down to if you have something called significant personal services or not. Significant personal services are rare that someone would have those significant personal services. So the vast majority of people are going to not have those significant personal services when you're owning a short-term rental property, even if you're managing it remotely. That being said, there are special rules for reporting short-term rental properties. So we're going to take a look at those. We're also going to give you some amazing resources on how to determine where to file those short-term rental properties. We've created a proprietary flowchart, and we're going to dive into that next. Finally, we're going to have those calls to action. So first of all, let's define what a short-term rental property is per IRS regulation. So there are two different requirements for a short-term rental property. You don't have to have both of them. You just have to have one of the two. The first one is the average tenant stay is 7 days or less. So that's pretty simple. Average tenant stay is 7 days or less. So that is typically a vacation property. Or the average tenant stay is 30 days or less, and you provided that significant personal services. So what does significant personal services mean? Well, you get to see on the slide. It means that you are doing the cleaning and changing, the transportation, the meals. You are basically their on-site concierge, and typically you're going to run into that when you have an inn owner. You're typically not going to have significant personal services if you're managing your own short-term rental virtually. Let's jump in. I know there's a lot going on, but our first flow chart we're so excited to share with you is the flowchart for if you are providing significant personal services. We have another flowchart that we're going to share next that is if you do not provide guests with significant personal services. The vast majority of people are going to flow into that flowchart. We're going to that flowchart. So looking at this flowchart, and this flowchart is going to be part of the resources page, we have to say, do you provide these services? If it's a yes, is the property owned by an entity? If it's not, you simply record that on a Schedule C. That's much different. We get a lot of questions in our ecosystem. Do I report my rental property, short-term rental on Schedule E or C? This is where you would report it on Schedule C. If it is owned by a business, then we have to look, is that business a corporation, LLC, or partnership? And you can see flowing through this proprietary flowchart where to go with it. If it's a partnership, you simply report it on a partnership return. If it's an S-Corp, it goes there. If it's it's a single member LLC, we know single member LLCs are a disregarded entity. It goes on Schedule C. Multi-member LLC, similar to a partnership, you're going to report it on line 1, the income, and lines 9 to 20. You're not going to report it on the rental property, the 8800 series form on that rental property. S-Corps, you're going to see here, and then C-Corp, there's no real difference on the C-Corp if you have significant personal services. So this flowchart is going to be available to you. Let's jump in to the situation that's more common. Did you provide guests with significant personal services? That is typically a no. In that case, you're going to report if you own it personally on Schedule E and attach that to your 1040. If you're a single member LLC, Schedule E and attach to your 1040. And you can see the partnership or multi-member LLC, that Form 8825 that I referenced, and you're going to attach that to a partnership return. I'm going to bring you up over to the S-Corp. If you're an S-Corp, you're going to file that 8825 and attach that to an S-Corp return. C-Corp is the same no matter what. I know there's a lot of information, but don't worry. These flowcharts are in the resources page. I'm going to walk through some of these. Remember, Schedule C, that's significant personal services owned either by a single member LLC or owned personally. This is what Schedule C looks like. Schedule E, you don't have significant personal services, owned personally or owned with a single member LLC. Our 8825 form, again, that goes with on the partnership return of the S-Corp without significant personal services. And this is at 1120. Regardless if you have personal service or not, if a C corporation owns a rental property, it all goes on the same place. And again, those are all in that flow chart. Lots of information here, but let's wrap it up. Let's look at our calls to action. First, determine if your rental property is considered short-term. If it's not considered short-term, don't worry. We have a long-term rental property mini lesson for you to absorb. But let's assume it is short-term, either that's 7 days or less or 30 days average stay or less with those significant personal services. Figure out where you're supposed to report the activity by using those flow charts. Determine if you have material participation in the short-term rental. If you have material participation in the short-term rental, you might be able to take advantage of what's called the short-term rental property loophole. And you might be able to take losses that are typically passive as non-passive losses and pair that with another strategy, which is called a cost segregation study, which brings me to takeaway number 4. If you have a short-term rental property with material participation, you might want to consider that cost segregation study, or if you're providing significant personal services, you might want to consider that cost segregation study, or if you're a rep status. All right, thanks so much for watching the short-term rental mini lesson. There are a ton of other resources in the Teaching Tax Flow ecosystem. Please dive in and have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.